And okay, so we're working on the 941 yesterday, and we got all the way through, but I wanted to go through and just kind of give you some hints and tips on these worksheets. They've expanded the worksheets for quarter 2, 3, and 4 for 2021. For last year, 2020, they only had the 2 worksheets. So if you have to do like a 941X for 2020, realize there's only worksheets 1 and 2 for the qualified sick and family leave and for the employee retention credit. But for quarter 1 of 2021, there's only those 2 as well. But with the American Rescue Plan Act, they added, you've got that division between qualified sick and family leave wages before April 1st, 2021, and those after the March 31st, 2021. So they expanded that. Plus you have your COBRA assistance, COBRA premium assistance worksheet thrown in there as well. So there's more worksheets, and these worksheets are kind of nice in that they tell you where to get all the information from. So we're going to go through them fairly quick. Just a couple of hints and tips on them. So as you can see, they tell you, here, enter this information that you get from this line, enter this information, your Social Security from line 5A, your Social Security tax from line 5B. So those are the wages, Social Security tax from your wages, Social Security tax from your tips. Add those together, multiply by 50%. The only thing I can tell you about is line 1J and 1JI. Is that right? Yeah, the form 5884C is your work opportunity credit for tax exempt organizations that hire vets. And form 5884D is the employee retention credit for tax exempt organizations affected by qualified disasters. So that's what those 2 forms are. And you'll just take the information, the amount that you claimed on those 2 forms, and plug it into those 2 information. And you will need, once you put it all together, you're going to need the number on line 1L. Next is worksheet 1, step 2 for sick and family leave credit. Oh, before I continue, I was going to tell you the definitions or for sick and family leave. For sick leave, it's people who are unable to work due to quarantine. They're a federal, state, or local quarantine, or if they're self-quarantined. Those are 1 and 2. If they are waiting for a self-diagnosis because they have symptoms of COVID and they're waiting, or not self-diagnosis, they're waiting for a medical diagnosis, or if they're caring for an individual, or if they're caring for a child that can't go to like daycare or to school. Those are some of the definitions. If they are unable to work due to a governmental quarantine, or they're self-quarantining, the sick and family, the sick leave that they can get is up to $511 per day per employee, or for that is for before April 1st, 2021. For those that are waiting for a diagnosis, that are caring for individuals, it's $200 per day. Now, for after March 31st, 2021, that falls under the American Rescue Plan, they have a limit of 80 hours for anything taken after that day. But if they received sick pay before that time, those hours that they received before the April 1st date are not going to affect that 80-hour limit after April 2021, April 1st, 2021. So any hours that were taken under the Family First Coronavirus Relief Act do not affect the 80-hour limit for the American Rescue Plan Act. But there is an 80-hour limit for that. Again, it's $511 per day for the first couple of definitions: unable to work due to a governmental quarantine or self-quarantine, $200 per day if you're caring for a dependent or waiting for a diagnosis. The maximum paid out cannot exceed either 500 or 5,110 or 2,000 per week. So it's that 10 days, 2 weeks, 2-week period, the 80-hour thing. For FMLA, after March 31st, normally for FMLA, you have that 10-day waiting period where you don't get any pay that you can use, like any sick pay that you have. On the American Rescue Plan, that 10-day rule does not apply. So they can go straight on to FMLA through the American Rescue Plan. Those are a couple of points that I wanted to put out before we continued on that. So worksheet 1, step 2, again, you can just follow through and just plug in what they tell you to, because they tell you where to put it. I wanted to point out on line 2A triple I, the qualified sick wages excluded from the definition of employment under sections 3121B 1 through 22. A test tip that I have is to getting to know these sections 3121B. So section 3121 is IRS definitions. So 3121A is the definition of wages. It goes through 12 pages of the definition of wages. It covers everything that's considered a wage. Section 3121B is the definition of employment, and it goes through all kinds of different employment. It even includes the president and vice president of the United States in there. So if you're employing somebody that is not included in those 22 subsections of employment, you're going to take their wages and plug it in on this line 2A triple I. I don't know what kind of employment that would be, because trust me, they cover all kinds of different employment on there, but I'm sure there's something in there that would land in there. They just want to cover everything. But I would, if I were you, like I told you yesterday, before your test, read through Circular E and Pub 15, because it covers a lot of these different like section 3121, what they actually are. You don't have to like read those sections, but if you know where to get the information, they do test you on this. Like, where can you find the definition of wages? Well, you're going to know it's going to be section 3121A is where you're going to find the definition of wages. I did have that come up in my test, where you find the definition of wages, where you find the definition of employment. So knowing that what they want to know is that you know where to find the information. Not that you know every single form and every single section, publication, and everything, but they want to know where to find it at is the main thing they want you to know. That's the only thing on this step 2, because like I said, it tells you basically where to find everything and what to do on these worksheets. They're pretty straightforward. If you're using, again, like I said yesterday, if you're using a software, as you're filling out these worksheets, it's plugging the totals that you need, where it says like line 2J, enter this amount on form 941, part 1, line 11B. Your software is going to plug that in for you. So once you've filled out this worksheet and you get to that part, it's going to plug it in your 941 where it needs to be. but you really want to know where it is or what the number should be. The employee retention credit, I had a fun time with this because last year we switched software. And because we switched it, I had to figure this out by hand. My software would not do this for me. So I got to know this one quite well because I had to calculate every single thing by hand. The employee retention credit, your qualified wages is up to $10,000 per employee, which is probably something you'll need to know. Normally, you can take most everything off of the lines 5A, line 5B. You multiply it. If you're a third-party sick payer, you're going to use line 1F. If you've got notice and demand, you're going to put the information there. Again, you're just going to plug in the information as you go down the line. You do need to know how much qualified health insurance that you paid for each one of these employees, because that's going to go in there. So where does that go? I think that goes up on a previous one where you let's see, I think it goes up here.
It's on, yeah, right there, 2B.
Yeah, I knew it was going to be here. Qualified health plan expenses allocable to qualified sick leave wages. You need to know that because this information here is going to flow down to your employee retention credit. So if you have health plan expenses, you take it just for the employees that qualify for it. You're not going to take all of your health plan expenses, and it's, you know, you have to know how much is going to go for each employee. It can be really fun, especially when you're calculating by hand. Let me tell you, that took me days to get to that. I was so glad that, and I did it again on first quarter because I wanted to make sure my software was doing it right. Because like I said, we switched software, and I had a feeling it was going to do it right on first quarter because we started off the new year, and it did. But at least I knew how to do it, and at least I knew where to get all the information from. But I had headaches for days trying to figure this one out because it was also brand new. So anyway, does anybody have any questions on the employee retention credit, where to find everything? So step 2 for the retention credit is, like I said, line 2A, the qualified wages up to $10,000 per employee. I had employees for the quarter that make $20,000 to $30,000, so I could only take 10,000 of that. Qualified health plan expenses. I'm not exactly sure why they do this. You put the qualified wages excluding the health plan expenses, and then you add the health plan expenses back in. I don't know why they separated it out, but you have to do that. So then you get your retention credit, the amount of the Social Security tax. Line 2F, second quarter amount of non-refundable portion of the credit for qualified sick and family leave wages taken before April 1st. So this is where your reconciliation, every single time you do payroll, this is where it's going to really come into play. If you are reconciling everything, and you know, when you get to the point where you've taken, you know, you've gotten everything done, and you know how much your non-refundable portion, when you get to third and fourth quarter, you're going to know where all that plugs in. I can't I cannot stress enough how important it is to reconcile at the end of every single pay period. It really can save your bacon on more than one occasion. So you're going to have a non-refundable and a refundable portion of both the sick and family medical leave or sick and family portion and of the employee retention credit. Now, this one is basically the same as worksheet 1, only this is for leave wages taken after March 31st. But it's fairly the same. It's just not as long, not as big, not as many things to plug in. Enter the amount of Medicare taxes instead of Social Security taxes. This one's the big one. This is the fun one. Lots of things to put in, but again, they tell you where to find everything. From, 941 part 3, line 23, not lines 2AI, qualified sick leave from 941 part 3, line 23 that were not included as wages on line 41, or from 941 part 1, lines 5 and 8, 5A and 5C. They tell you exactly where it comes from, which I was really, really appreciative when going through these things. Because trying to figure this thing out is really difficult sometimes, but they tell you exactly where to find everything. So any questions on the worksheets? Okay, so just some general terms and liability for 941. If you're a Schedule B, semi-weekly depositors have to have a Schedule B attached to their 941. When you put your amounts down, it is for the date that you pay the payroll. So like with Schmeezer, we're a weekly payer, we paid every Friday. You don't put down the date that you actually make the payment, but the date that you did the payroll. So like say pay date is tomorrow, the 13th. So that would be their liability date would be 8/13. A common mistake is to make the liability date the date that you make the payment. And they will kick that back to you. If you make the liability date the date that you make the payment, they will kick that back to you. The Schedule B has the 3 months for each of the quarter, and then each month gives you 31 slots. You don't put any punctuation in it. It already has the punctuation in it. You put the dollars and cents in their respective places. Each month has a total, and you total each month up to the bottom. That total at the bottom should match your total from line 12 on your 941. Form 941 Schedule R is for aggregate 941 filers. You should have aggregate for each client listed on your Schedule R. Multi-site reporting. Now, every state tends to have a Bureau of Labor standard survey requirements. They might not do it for every employer, but they do require some employers in every state to report. Schmeezer was required to report to Colorado. A couple years ago, I was required, when I first started, I was required to report Nevada, but not Colorado. And then it switched from Nevada to Colorado. But you have to report things like your total number of workers, your total number of women workers. I had to report out of my total number of workers, I had to report how many construction workers I had. I had to report my total amount of wages. I had to report my total amount of hours worked, total amount of construction hours worked. I had a guy that I reported to, he called every time, his name was Tony. And it only took me 5 minutes to report to him, and we spent 30 minutes on the phone. He was the nicest guy in the world. And he was really sad when I talked to him the last time because I wasn't going to talk to him again. But you can report online or you can report in person. But most states require you to do this. Employees with more than one work site will file a quarterly state unemployment contributions. Now, this gets a little dicey as to the unemployment depending on how long the person works there. Every state has a different requirement as to when you start reporting unemployment. We had a job that was in Louisiana, and I got everything started up in Louisiana, but I was talking to the state of Louisiana. They said, don't start the unemployment there because none of the people actually lived in Louisiana. So I did not report my unemployment in Louisiana. I either reported it in the state that the people lived in, if we were there, or I reported them in Colorado if we did not have a presence in the state in which they lived. So I actually didn't report unemployment in Louisiana, even though I had a withholding in Louisiana. And the same thing happened when we went to Oklahoma. They said, nope, you don't report in unemployment in Oklahoma, you report it in the state that they either live or the state that the company resides in. So it depends on the individual state. In Colorado, I think it's like 10 days. They can be here 10 days, I think it is. In Nevada, I think it's like 10 days as well. I had somebody go there for a week and come back. I didn't have to report her. It just depends on the state, how many days they work there before you have to start reporting the unemployment. Each state has a different requirement as to how long you pay, how many dollars you pay unemployment on. I know it's as little as the smallest states have like 7,000, Arizona's $7,000. The highest state I think right now is Washington State, is like $42,500 or $600. You'll pay on unemployment until they reach that $42,000. States, I think the average is between $15,000 and $20,000 for most states. But whatever state you go into, you need to look at what your top out on unemployment is. You file it quarterly with the state employment office. Most states you have to file your new hire, unless you're at you can file new hire reports. You can file for a single state reporting. If you have a lot of people hired in a lot of states, you can say, okay, send off and say, I request to file in just one state. And the reason for new hire reporting is for child support. You file that you hire this person and it goes out to all the different states, and they know that that person's been hired. If they have a child support order, they know to send it to you. Yeah, multi-state work site reporting are filed with the Bureau of Labor Standards. They're not filed with the state. It's a federal thing. It's a test tip. I didn't get any tests. I didn't get any testing questions on that, but that just could be because I didn't get it. They could still test on that. Pop quiz. If a monthly depositor pays 98% of their tax liability timely, when must the remaining balance be paid? By the due date of the quarterly return, by the first Wednesday or Friday, which is ever earlier after the 15th day of the following month, by the end of the month, or within 3 business days. Oh, you said by the due date of the quarterly return, you are correct. When using a shortfall, which is for a monthly depositor, if you deposit at least 98% or more of your liability on time, the 15th of the following, which is the 15th of the following month, the deposit shortfall is due by the due date of the 9/41, which is the last day of the month after the end of the quarter. Forms W2. If you've been in payroll any time at all, you know what it does. You know how to fill out a W2. Everybody knows what a W2. If you've been employed, y'all know what your W2 is. They do test a little bit on this in the testing. Mainly what they're going to test you on is what goes in the boxes. Boxes 1, let's see, 1, 3, and 5 are the main things that they test you on. 1, 3, 5, and 7. They also test you a little bit on 15, 16, and 16 and 18. They'll test you a little bit on. The toughest questions will come on the boxes 11 through 14. They're really going to want you to know like the codes that go in box 12A through 12D, box 14. They really want you to know what codes they're in. But in general, on the forms W2, it's going to be, they have to be filled out very precisely. No like dollar signs or anything like that. Name, address, employer identification number, social security number. Employers filling out 250 or more W2s in a calendar year are required to file them electronically. However, the IRS is starting public comments on the fact that they do want to lower that requirement to 10 or more need to file electronically. The APA just sent out on their Pay News Weekly that the IRS is starting public comment on that they want to. And this is something that they've been talking back and forth about often, but they do want to lower that to 10 or more. When filing forms W2, that's a 6-part form, and the copies go to what is listed there. Copy D is retained by the employer. It needs to be kept for up to 4 years. Most of these, if they're filed electronically, you're not going to keep a copy of like the copy 1 that goes to the state. That's all electronic. Copy A is electronic. For the employee, they're probably most employers give them like 3 or 4. Give them a W2 that has 3 or 4 copies to it. Employers can receive a 30-day extension by filing a form 8809, application for extension, which really sucks for the employee if they do that. So try not to do that. I'm not going to go over this a whole lot because if you've been in a payroll a whole lot, anytime at all, you're going to know pretty much the definition of or what goes where. If you've been an employee or in payroll at all, you know what goes where. What box contains what. But I want to go to the next one over, which starts concentrating on the boxes with the codes on it. A little bit of a test tip. Odd boxes are wages, even boxes are taxes. So this is what I really want to concentrate on because they will test you on these codes. So it is something that you kind of need to digest and get in your mind and kind of know what codes are what. So box 12 has 4 sub boxes. And I'm not going to read this all to you because you guys can read yourself, but I would encourage you to go through this really carefully and take notes on it. Especially things like code C, the value of a group term life insurance coverage over $50,000. No things like that, the numbers like that, that this is over $50,000. No, like code B is uncollected Medicare tax that should not be included in box 6. No things like code J is sick pay that is not considered income. The third-party sick pay that is not subject to federal income tax that is not reported in boxes 1, 3, and 5. Little things like that, excise tax on parachute payments, you know, those big payments, that the golden parachute payments, that huge tax that they get on there. Those are the kinds of things they will test you on. So I would print like these pages out that have these codes on them and go through them really, really carefully. As shown here. Again, uncollected Social Security tax on the railroad tax group term life coverage over $50,000. Non-taxable combat pay. That's something they'll ask you about too. Archer medical savings. I don't know how much they spend on that. That's not something that's very common, but sometimes they'll throw something like that. That's not very common. Employer provided adoption benefits. You're going to want to know that amount, that in excess of 14,300, those little things like that, but you'll need to know numbers like that. So make sure that you know those. I said Archer pay and that one's circled. That's funny. Which one of these? Oh yeah, code DD, cost of employer provided healthcare. That is something that everybody needs to know, just for your own benefit, for when you're doing your own taxes too. You kind of need to know what that is. Code EE is something also, the Roth contributions under a governmental plan. They'll test you on that. Anything with numbers on it, the limits on it, I should say, limits, they're going to test you on those limits. Get to know the definition of a statutory employee. They will test you on the definition of an employee. What's a statutory employee? What's a contract employee? What's an actual employee? Go through those really carefully, because they will test you on those things. A retirement plan. If they were an active participant in an employer's retirement plan, that box is going to be checked. If there's third-party sick pay, that's important too. That's going to, because you're going to have to know what's in that, because that's going to be you're going to know that anyway, because it's going to be there's going to be numbers on your 941 too. Box 14, there's a lot of stuff that will fall into that other box. They will test you what falls into that other box. It's an optional field, but there's a lot of things that can fall in there. Health insurance premium, charitable contributions, educational assistance, lease value of a company provided car. Those kinds of things they will test you on. Know what will fall in your box 14. Box 15 through 20, they're not required, but some states will require it. Pop quiz. Form W2, which box is matched with which use? Box 3, Social Security tax withheld. Box 9, dependent care benefits. Box 11, non-qualified plans. And box 13, payouts from non-qualified plans. So which box is matched with its use? So it's box 11, non-qualified plans. It's used to report the distributions of deferrals into a non-qualified deferred compensation plan. Box 10 is used to report dependent care benefits. Box 3 is used to report Social Security wages. Box 13 contains check boxes for retirement plans, statutory employees, and third-party sick pay. We just talked about that. Any questions so far? The IRS publication 5144, federal income tax and FICA withholding for foreign agricultural workers on an H-2A visa. These get fun. So there are workers who are eligible to work in the US as long as they have this H-2A visa. It's a temporary worker program that provides a way for these employers that might not be able to find enough domestic workers to bring in immigrant or non-immigrant foreign workers to provide labor services on a temporary basis. They're exempt from federal income tax withholding and from Social Security and Medicare taxes, obviously, because Social Security and Medicare taxes, you know, therefore, when you retire, when you are either, you know, old age benefits or whatever, obviously, we're not going to require foreign workers to contribute to that or to federal income tax because they're just here on a temporary basis. If an H-2A worker is provided a Social Security number, you're going to report wages of $600 or more on a Form W-2 in Box 1. Or you're going to report it on Form 943, the annual tax return for agricultural employees, line 1. They do test you on a little bit on Form 943, Form 944, so get to know those a little bit. They focus more on 941s because it's more common. But do know what the 944 and the 943, what they are, and you know, go through them and get to know them a little bit. H-2A workers and backup withholding. So employers have to do a 24%, which is huge, I think, backup withholding on H-2A workers' wages if they've not been furnished a U.S. Social Security number or an individual taxpayer an ITIN number, and the total wages paid to the worker is at least $600. So this is a big one. The employers are liable for that amount of the tax. The tax that should have been withheld but was not. So if you're an employer and you didn't realize that you should have been withholding these taxes, it doesn't matter. You're still liable for it. You're going to get hit with it plus penalties and interest. Backup withholding. Report the wages subject to backup withholding on forms 1099 miscellaneous and the form 945 annual return of withheld federal income tax. A Form W3. So this, a W3 is the totals of all the W2s together. This is what goes to the Social Security. Make sure that the Form W3 and Forms W2 show the correct tax year, the employer identification number, both. And you do need to retain these for at least 4 years. You're going to take this W3 and a copy of all the W2s that you produced in the year, and you're going to send this to the Social Security Administration. Again, it's $250, but like I said, they're bucking for the 10. They really want everything electronically filed. Pretty soon they're just going to say electronically filed, period. They're not even going to go with the 10. The due date is January 31st for the Form W3 and all copy A's of the Form W2. So for the Form W3, you don't have to have a control number. Usually that is, I mean, usually it's really big companies have a control number for that. And it's usually for, they have multiple companies that report to one, that go to one big company so that they know this control number belongs to this company. This control number belongs to this company. That's usually why they use a control number. If you're a single company, most of the time they don't have a control number. Box B is the kind of payer or employer. So I think there's like a number there. I'm trying to remember. Yeah, there's a number you can put in. It says it says like military and stuff, but it's, oh God, I'm so sorry. I just got a complete brain fart on that. I don't know if it's actually says military or if it has an actual number in there. So I apologize for that. I got a complete brain fart on that. Box C is the number of statements that you are sending. So, if you're sending 700, if you're sending 300, whatever, however many statements you are sending. Establishment number is optional. And of course, if you're using more than one EIN in a year, you're going to put those numbers in there. Box 1 through 11, the total amounts from your W2s, copy A is being sent. You're not going to send anything on avoided forms. Box 12A is any deferred compensations. Box 16 through 19 is state and local wages and taxes. You don't have to put numbers in this, but it's kind of nice for your own personal records to put them in there so you have totals there. Agents who have filed with the IRS an approved Form 2678 employer appointed of an agent, they have to do special rules. So like, CPAs and stuff, if they're an agent of the employer, they have to meet special rules. Those with computer capabilities really should file this electronically. I think everybody should file electronically because I've had stuff get lost in the mail with Schmeezer. I've had I've sent in the 941 with the Schedule B, and the Schedule B got separated from the 941, and we got penalty and interest for not sending in our Schedule B, and I was able to talk them out of, dinging us for that. But if we could have sent it in all electronically, we wouldn't have gotten that. So all your forms W3 should be are due by January 31st. If you're doing the filing information returns electronic or the FIRE system, it provides electronic filing information forms, publications, and information, access to communicate with the IRS and SSA and general topics of interest. Yeah, good luck on communicating with the IRS or the SSA. Yeah, good luck on that. Anymore, it used to be okay, but anymore, it's really hard to communicate with them. So your test tip is the 1099s are filed through the FIRE systems. ACA is filed through the AIR system. Kind of funny. Maybe the people who put that together are like Earth, Wind, and Fire or something. I don't know. I'm tired, guys. Can you tell I'm tired? Pop quiz: which form is used by local government employer when holding only Medicare tax? It's still the 941. 941 is quarterly, 943 is annual agricultural, 944 is the annual with less than $1,000 in tax liability, and the 945 is annual with federal income tax from non-income tax. Does that make sense? Okay, so
Quick question. What would be an
Uh-huh.
example of what would be an example of a company that would use the 941 or 945? Excuse me.
the
That one.
945 annual
Yeah.
fit from non-income tax.
Our reason you would.
You know,
So I
let
looked it
me-
up. It says pension, military, retirement, gambling winnings, Indian
That's-
gambling profit, voluntary withholding on certain government payments, and backup withholding.
That makes sense.
I had to Google it. I didn't know that.
Yeah, thanks. I was about to.
the wonders of Google.
Mhm.
And again, the circular E and the Pub 15 do cover those in good detail. Let's see. Federal unemployment tax. So this is a tax that so there's the FUTA tax. I think it's like 6% to provide income to terminate employees while they are trying to secure another job. It's only paid by employers and is calculated as a percentage of covered wages for each employee. It's up for your covered wages up to $7,000. It's not withheld from the employee's wages. Each state requires the employees to contribute towards this. But the thing about it is there's some states, you know, I said it's 6%, but if a state contributes to the federal portion, one of it will lower depending upon the contribution from the state. It gets to be really fun. So most employers don't pay the full 6%, like I said here. Employers paying their state unemployment taxes in full and on time can receive a credit against their FUTA tax for up to 5.4%. Employers receiving the full credit can have an effective FUTA rate of 0.6 and pay just $42 for each employee for at least $7,000 of the covered rate. Each state, of course, will have their own unemployment tax. Now, I have a question for you guys who have been doing this. You know how COVID for all your states said, oh, your state unemployment tax will not be affected by all these people applying for unemployment due to COVID. How many found that to be true and how many found your your state unemployment tax rate skyrocket this year. The reason I ask is because for Schmeezer, when I took it over, their state unemployment tax was ridiculously high on all the states, because the people who were there before me never answered their unemployment. You know, when the state sent them something, they never answered the unemployment questionnaires, and I made sure that I answered every single one of them. That lowers your rate when you do that. When you respond in a timely manner, it lowers your rate, and I lowered every single state. Well, when I would answer all these unemployment questionnaires throughout COVID, great big bold letters on it says, none of these COVID claims will affect your rate this year. And in Arizona, we went from like, I think it was like 4.5% to the highest rate, like 18%. And Colorado went up, and every single state went up. It's just like total liars. Total liars. Complete
Pennsylvania
liars.
went up too. Yeah, Pennsylvania went up too.
It was ridiculous. It's like, you lied to us.
Dolby
I was not
said all
happy.
of Dolby said all of their clients' rates went up.
Yeah, they completely lied. It was frustrating too when you work so very hard to bring them all down. The normal credit against the FUTA tax liability equals to the amount of an employer's required contributions paid in a timely manner to a certified state employment insurance. They must be paid by the form's 940 due date to receive the normal credit. All states' employment taxes owed must be paid by the filing date of January 31st. There's a little caveat to that though. Once you hit $500, you do need to make sure that you pay that on a quarterly basis. You got to pay that amount. If you hit that $500, you can't wait till the end of the year. You do need to pay it. Anything 500 or more on that quarterly amount basis, or you kind of get in trouble. Amounts owed must actually be paid. Well, that's a shocker. State contributions must be paid by the employer. Alaska, New Jersey, Pennsylvania require employees as well as employers to make unemployment insurance contributions. States must have a certified unemployment insurance program. There are some states that, like, if they like borrow from the from federal, and if they don't make like timely payments, the feds like cut them off. They don't get that what do you call it, credit, and so you're going to be paying that 6% for federal. It doesn't happen very often. I think Puerto Rico is the only one right now that has that. The rest of them, everybody else has got good credit, but I think Puerto Rico, they borrowed, and they didn't get paid on, they didn't pay it on time, so they lost that credit, that 5.4% credit or whatever. But they don't, that state doesn't qualify for it. It's, like I said, it's pretty rare, but it does happen occasionally. So we're going to stop at this page. I'm going to read through it and then stop here, and we'll continue the rest to finish up tomorrow. Test tip: know and apply exempt items from FUTA calculations. There are items that are exempt from FUTA, which kind of makes sense. They kind of go along with most things that are exempt from federal wages: sick and injury payments, deferred compensation, Section 125 flexible benefits, non-cash payments, death or disability retirement benefits, non-cash payments to agricultural workers, reimbursements, obviously, the value of a group term life insurance coverage over $50,000, the value of deductible meals or lodging, wages paid to a beneficiary and tips not reported by an employee to an employer if less than $20 a month. So is there any questions on what we've talked about today so far?
Nope.
Okay. Well, thank you all for joining. I'm going to stop sharing my screen. Oops. Sorry. Stop.